All right, good evening. It's Thursday evening. It's about 10 of 10. Not that that's relevant to what we're doing here, but just to give you a flavor for why my voice might tail off into the sunset and hear some snoring here, you'll know why. Basically, what I wanted to do is supplement the last part of our class today to talk about, well, that's a good way to start. Let's try it again. I wanted to supplement when we talked about non-controlling interest, just so that it's clear what we were talking about on the income statement. When you see down at the bottom, after all the net incomes from operations on this is on a consolidated statement, net income, what the heck did I write there? Okay, okay, let's try to, all right, there, from ops. So you're going to see a net income from ops, and if it's Nike, like the way I think Nike works, it's more a number like this, like $10 million, maybe even more. Then they'll have the tax, and let's say, knowing Nike, they're not paying a whole lot of tax, so they've got all kinds of gimmicks. So let's say it's $1 million, and then they'll show $9 million as their net income from operations after tax. This is how those income statements work. See the text for more detail. Now, net income after tax. Then let's continue this to the next slide. So keep this in mind. Then what you'll see is you'll see income or net income, and they'll call it this, non-controlling interest. And that's what I want to focus on in this little video. Could be a loss also, but let's just, again, it's Nike, so everything makes money. Whatever they touch turns to running shoes or walking shoes. So they'll have, let's say, maybe they'll show $100,000 net income from non-controlling interest, and then they'll draw a line, and then they'll have net income from parent company operations or something like that. Again, see the text to see exact language, but this language is chosen in order to teach you the differences between, or not the differences, but how this is in a consolidation statement. So they'll have something called net income from operations, and remembering the number from before, it was 9 million, so this will now be 8, 9. And you can see what I talked about in class is you just have to glean how the numbers work to see that this is a subtraction. So the net income from non-controlling interest is not even in addition. It's see how it works? You got net income after tax, and it's 9 million, and then they show you net income from non-controlling interest, but that's a subtraction. So here's why. That's what I want to get into. Up here at the first number, this net income from ops, in order to make this less confusing, let's take this away. And let's say we're dealing with a consolidated financial statement. Consolidated means it's a financial statement representing the main company and all of its holdings, all the companies it owns, whether they own them 100% or some percentage less, but some percentage that gives them control. So the consolidated statement is the main company plus all the companies they control. And so when they do that, they show all of the income from all the companies, even if they own them less than 100%, even if it's less than 100%, all the income from all those companies, including the main company, the Nike parent company, is included in this number. That color didn't do it for me. Let's do a different color. One that'll really emphasize it. There, a little pink, or sort of pink. So this number here, this 10 million, represents the income from the parent Nike company and all of its holdings at 100%. But they don't own all of them at 100% sometimes. They could, but like in Nike's case, they do. But in this case, let's say they don't. So if they don't, you're going to see what they're going to do is that they're going to take out of this $9 million income, because this is the net of all of the companies they own at 100%, but they don't own them 100%, if they don't own them 100%, what they do is they'll show the amount of the income that belongs to the percentage of stock that they don't own of these other companies. And this number just comes from the mathematics of what are these other companies that they own, what do they make, what's the percentage of the non-controlling interest, take that much income and take it out of the total income. And this total income here, at this point, is the total consolidated income. And that's the line they'll say, total consolidated income. And here, they'll subtract it, and they'll call this income, not net income from parent company, but if you look in the text, it'll be called the net income from the controlling, and that's what they'll call it, controlling company, which represents, or the controlling interest, which represents the parent company, if it's Nike, with all of its percentage ownership of all the companies they own. That's what this number represents. This represents, again, the amount of income from the companies they own that they don't. That's not the percentage that they own. They control the companies, but it's not the percentage that they own. Boy, this gets confusing. It's a whole course. It's advanced accounting, which you'll want to take when you get closer to your senior year because it's good for the CPA exam. But at any rate, what you should get out of it is that when you see net income from non-controlling interest, that means that you're looking at a consolidated statement. That's one clue. And it means that the consolidated group has controlling interests of a bunch of companies, but they don't own everything 100%, and the amount of income that they didn't own the 100% of, meaning the percentage that belongs to the non-controlling interest shareholders. That's really what this is, the non-controlling interest shareholders. The amount of income that belongs to them was $100,000. And it's all because over here, back to this, in this number here, this represents all the income from the parent company plus 100% of all the companies that they have control of, but they don't necessarily own 100% of all the companies that they have control on. So one more thought. I know that I'm past my usual 5 or 6 minute allotment for this, but one more thought to try to explain what happens in these consolidated statements, because this is the theory of why the parent company is including 100% of all of its subsidiaries that they have controlling interest in. They're including in the consolidated statement 100% of the income, but they don't necessarily own 100%. The real ownership, let's put the real ownership like down here as an example, it might be 90%, might be 80%, and you can see these are still controlling amounts of interest, maybe 70%. But in the consolidated statement, they show 100% of the results of operation, and that's why this line is called net income from the operations consolidated, back up to this name, consolidated, and that's why they pull out the non-controlling interest share in order so the reader would know that, okay, yes, $9 million is the net income here from the consolidated total of what the parent company controls, but really, the amount of income that the parent company made, meaning the controlling interest, is 8.9. And where did the other 100,000 go? Well, the other 100,000 is the 10% of this company and the 20% of this company, and yes, you got it, the 30% of this company. This is the non-controlling interest. And that's what you sort of need to know about that part of Chapter 4. And if you've got any questions, send me an email. See the text for more detail, and enjoy. It's a really fascinating area of accounting and accounting theory. Oh, I wanted to conclude with why do we show all the income at 100% and then take out the non-controlling interest? Because think about it. What does the parent control? All of it. They control all of it. They don't own all of it. They're not the full shareholder, but they do control. So the consolidated statements, to be fair to the reader, shows everything and all the results of operations that the parent controls, and then breaks out the non-controlling interest separately, so at the end of the day, you can see the income from the controlling interest, which in this example, bingo, 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 and my time is up. So, and now I'm going to go to sleep.